You have a great perspective on what these sorts of disputes could mean for all sorts of businesses. So where do you see the biggest impact, if at all?
Yeah. Well, I couldn't help but listening to, is this a discussion or a brawl here? I wasn't quite sure. But I may not be invited back, but Tim, I'm with you.
That's what I'm talking about, my man.
We're assuming that we already have a trade war. And I think that's where the market was today. It kind of was trading on rumors rather than, than on fact. And so I don't think Boeing's a trade war stock. I think, Jim McNerney, former GE guy, did a superb job positioning that. I think, for China, where are they going to go? Tim, you said it, Airbus? I don't think so. Airbus is full up, and they need aircraft to grow the economy. They put $60 billion, am I right, back into the Chinese economy to make sure that they could stimulate it. And I think what we're missing here is, this president's been in office now a year. You kind of can predict outrageous, recommendations or take an outrageous position and then pull back. I saw this in spades when we were at GE together. I mean, Jack would always set an outrageous goal, and of course, he'd bring you to his side of the table, and he didn't get what he asked for, but he got more than you were going to offer. And I think we're seeing a strategy here, and we're also seeing, the old saying, we're seeing the sausage being made. The last administration, you didn't hear anything, you didn't see anything, so you didn't have the insight, that we have through the benefit of everything being tweeted out in the process. One time it's a rocket man, the next time it's, hey, buddy.
Hey, good to see you.
Yeah, good to see it. So I'm not as concerned about this. I think we overreacted. I think the algorithms took charge. I don't think there was a lot of human intervention in what happened today. We'll see tomorrow, right? We got a little pullback from the depths of 400. What are we in, about 280 or something? And these are industrial stocks, so they were going to get hit the hardest.
Industrials as a sector down in correction territory right now. What would you advise the president? I mean, having had a front row seat to the Jack Welch style of negotiation, which Donald Trump, you're saying, it seems to have adopted.
Yes.
At what point do you pull back and say, you know what, it's gone too far? Because the market is reacting pretty dramatically when it comes to certain sectors and certain stocks.
I think, again, president's going to do what he's going to do.
Sure.
But I think, he's a very reasonable individual, and he's going to set an outrageous expectation. He's going to pull him to his side of the table. And I think when he sees some movement in a positive direction, then he'll come back over to a more reasonable decision point.
So you two were football players out there, and football, you got to study film because you're looking for the tendencies of the other team, right? And teams that do the same thing over and over again, sort of easy to study for. My point is, President Trump, I mean, this is his game plan, but his tendencies are such that don't you think other people are on to him now at this point? He puts the worst possible deal forward, then walks everything back. At a certain point, it might not work anymore. Are we at that point?
You just never know if he's going to walk it back or not. That's still to be determined. He has in several occasions, but he may not. He may elect not to. When you look at, he's always talked about fair trade. You were talking earlier today about the auto industry. I heard about the BMWs and so forth. And you look at, having been in the auto industry, I'm not sure we had fair trade. When I was running GE Power Systems, until we saw this administration help us on corporate tax, now we're getting a little better level playing field. When I was having to compete against ABB, Siemens, and Alstom, what I was exporting versus what they were importing. So, if you look at the recent CEO surveys, over half of them think the next 12 months is going to be better than the last 12. Over half of them think they're going to add more employees. 3/4 of them said, hey, we are where we are because of corporate tax rollback, repatriation, and what we've seen in government regulations. All very, very positive. Now, the repatriation, I think we got a good hit in the market from that. It's immediate. I don't think we've seen the full impact yet of the corporate tax cut. We're only into it for a quarter, almost 2 quarters now, right, Steve? So I think we're going to continue to see that. I think, earnings are very positive through the first half of the year. And I think, the market reacts more violently on a rumor than they do on positive performance.
Right. Bob, it's always great speaking with you.
Thank you
for your time. Great to see you in person.
Thank
you. Bob Nardelli.
Handsome man.
Among other things, yeah.
No, I'm just saying. I can't say that. I mean, it's true.
Of course, well, you just did.
Fact.
So let's say that the market is overreacting, and you have not a trade war stock like a Boeing, although everybody seems to think it is a trade war stock.
Bob doesn't. Bob agreed with me.
Okay, right. But is this the weakness that you're?
Understand the game.
Are you willing to buy this weakness? Or do you say, you know what, the market, no matter what I believe, the market is perceiving this to be a trade war stock and is selling it. So I'm not going to touch it.
One of the things that concerns me is, you know, despite the negotiation stance maybe being just that, I worry that this administration doesn't really understand the basics of trade finance, or at least understanding where the trade deficit actually, how it's measured and what it looks like. I also think that the global manufacturing chain is such now that I think we're in a different place than we were 20 years ago. So ultimately, I think there are a number of products that really are truly globally created, and I think this brings in a lot more. Bottom line is, confidence is a leading indicator, and some of the confidence indicators we're hearing, whether it was the housing numbers yesterday about lumber prices, steel companies, regional Fed surveys, people aren't happy.
I think when it comes down to it, just to clarify the game in my mind, I did not think today's reaction was officially trade wars. If we get to the point of trade wars, then I do agree with you that Boeing's getting hit wrong because 95% of their income comes to the United States. I mean, those are just the numbers. Yes, they have revenue coming from China, but they don't make money off of the revenue that they're
doing. Lowest margin planes.
Right. So because of that, I'd agree. I'm just saying that there are names out there, and some of the names we were talking about on this desk, that absolutely have enough exposure to China that if there's a full-blown trade war, they deserve to be sold off.
But right now, they're weak, and what do you do with them? Are they buying opportunities?
Yes, absolutely, okay. Because I'm in the belief that President Trump is in the midst of this negotiation once again, and any kind of weakness I see in Nike or something like that, I'd be a buyer.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.